Here we go. 3, 2, 1. Dr. Robert Heller. Thank you for being here, sir. How you doing?
It's a pleasure. It's a great day, but it's raining a little bit.
Are you in California?
We're in Belvedere, which is in Marin County, just across the Golden Gate from San Francisco.
Very nice. Okay. It's a little different weather down here in LA. That's a little bit more, it contrasts a little bit, but it's still a beautiful state.
Always sunny.
Always sunny. So, Dr. Robert Heller, thank you for being here. Many individuals know you as the former Federal Reserve governor, former president, CEO of Visa, executive vice president at FICO, and also an author, right, of The Unlikely Governor. But before all of this, before all of your career success and in corporate and in other sectors, you grew up in Germany, correct?
That's correct. I was born during World War II in 1940. And so as a little kid, I experienced the war itself, and I even got some memories of it. At the end of the war, we wound up living in a cave, not far away from Cologne, the city where I was born. And then, the rest we can explore more. You tell me what you want to know.
Can you share a little bit more about just what you experienced there during the war?
Well, like I said, I was born in 1940, right at the beginning of the war. And we lived in Cologne, which was the most bombed city in all of World War II.
Really?
Two air attacks were in Cologne. There are several reasons for that, but it was the closest city to England in a way. It's the furthest westward city in a big industrial city in Germany. And so at the beginning of the war, bombers could actually reach it when they couldn't get to Berlin or Frankfurt or Munich or places like that. And it was also easy to find because the Rhine River was just pointing at it. You could fly across the North Sea, look for the river, and you would get to Cologne. Once you saw the big cathedral, drop your bombs, and there you go. And at the end of the war, it was also bombed quite often. Let's say if Berlin or Frankfurt was under a cloud cover and the bombers had to turn around, go back home. Well, they couldn't land again with all the heavy bomb load. So they had to drop the bombs, and so they would drop it on enemy territory, if possible. And Cologne was the last big city to bomb. It was also an industrial city. There was a lot of chemical industry there. They were building the big engines for the tanks and for the U-boats. So there was, a lot to be destroyed. Yes, 95% of the city was destroyed at the end of the war.
I'm sorry to hear that. How did you escape that? What was the process like to go from Germany to the U.S.?
Well, that was quite a few years later. I went to high school in Cologne. And once I got out of high school, actually my girlfriend got a scholarship to go to a small college in Winona, Minnesota. And I decided, I wanted to be part of that adventure. So we drew a circle of about 250 miles around Winona, and I wound up going to Parsons College in Fairfield, Iowa. Well, Parsons College happened to be probably the worst college in the whole United States. It was literally known as Flunk Out U because students would go there after they had flunked out of Dartmouth or Michigan or University of Iowa, and then nobody would take them, but Parsons did. So that's where I went. They gave me a scholarship. They paid for the whole adventure, and I got my BA from there.
Oh, anything that a young man would do for love, right?
Right. But she went back home to Germany, and I liked it. I liked the United States a lot, so I decided to stay.
Well, I'm sure that in itself, that decision really helped shape your trajectory, right? Because had you left, you probably wouldn't have had the experiences, right, that you've had during your stay in the U.S., right? As mentioned, working for the Federal Reserve, being president, of Visa, and being the executive vice president of FICO. So that's amazing how one decision, right, in the pursuit of love, helped you really just have an amazing career. Um, my question to you is you've definitely lived a lot of different experiences, right? In Germany and just you talking about the US and how you got here to the US. Just curious, what was your family life like growing up in the sense of after surviving the war and coming to the US? What was your relationship with your family during all these events? Like, were they supportive? What was the role with you deciding to leave Germany and go to the US for, for the pursuit of love?
Well, my father, he was actually in the German army for the entire war. He was a translator. He was drafted. He was a private, essentially in the U.S. terminology. At the beginning of the war, he was a private, and at the end of the war, he was still a private. He never got a promotion. He was always a translator. But as a result, he had a very interesting life because he followed around at the headquarters usually. And, I got pictures with General Rommel, for instance, the famous German general. The two of them were together in Egypt, Northern Africa, and other places. So, like I said, my father, he was gone until I was 5, 6 years old, until the war was over. My mother died when I was 6 years old, right after the war. There were a lot of epidemics in Germany at that time, and she died from typhoid. And so I basically was raised by my grandparents and my aunts.
I'm sorry to hear that. I'm
No, it
sure.
was a good life.
Well, I will say you were blessed to have a strong family, right? In the sense of you had your grandparents, you had your aunts to support you. And I will say, me personally, I've grown up with older individuals, and it's different, right, than being brought up with other individuals because when you're brought up with older individuals, there's a sense of maturity that you get at such a young age versus perhaps running around with kids your age. Did you experience something similar? Were you mature, more mature, in your 20s than you were compared to other individuals?
Well, you're probably more self-reliant, not growing up with a mother or coming from what you may want to call a broken home. But look around. There are a lot of people, very important people, who came from broken homes. President Clinton did. President Obama did. I think even President Reagan, I'm not totally sure about that, but I think he came from a broken home. So people who are self-reliant at a young age, I think they learned to stand on their own 2 feet, so to say, and they were quite often successful later in life.
I think you're onto something because to your point, right, when you have some form of obstacle growing up or just having some kind of traumatic event or just something that made you have to be self-reliant, I think that does make that individual be more, to your point, self-aware of where they want to be, what they want out of life, right? Especially since if their life wasn't as easy, it makes you appreciate the things you achieve, right?
Yeah. And I was a lucky man anyhow, I mean,
Yeah. Yeah, no, that's great. And and again, that transitioning from just all of that you lived, right? Just up until, your college age, you were able to transition from going to that college that you're mentioning to becoming a UCLA professor. Can you share a little bit of your experience with that transition?
Sure. So, as I said, I went to a small Parsons College, Fairfield, Iowa, which, by the way, is now known because they went broke. It's now known as International Maharishi University, which is in the same building. It's a different institution. Anyhow, from there, I went to University of Minnesota in Minneapolis, but it was very, very cold there the first winter. And I frankly didn't like the cold. So I applied at Berkeley, Stanford, UCLA, and USC. Berkeley gave me a teaching assistantship, so I was able to support myself again. 3 years later, I had a PhD in economics. And from there, then I was hired, luckily enough, at UCLA, which was basically paradise as far as I was concerned. It was right next to Hollywood. I lived in Brentwood, and it was really a wonderful environment. Great students, and I thrived. I had a lot of colleagues that were quite famous. Milton Friedman, Friedrich Hayek used to be visiting professors there, and the faculty itself in the UCLA economics department was also quite good. It was just absolutely wonderful. I was 25 when I started teaching at UCLA, and it was a wonderful, pretty environment. I really enjoyed it, enjoyed teaching there. It was a great experience to start your career.
If you don't mind me asking, what motivated you to want to study, to pursue academia at that point? Did it have anything to do with, the way, the way you grew up in Germany with the war? Did you see this as an opportunity for you to grow as an individual and perhaps find that financial stability that maybe you were looking for or you didn't have when you were growing up?
Well, growing up in Germany, being a professor was really the most exalted position that you could dream of. Not to be disrespectful, there was God, and a little bit below God came a professor. And here I was, built to be a professor. Financially, it wasn't all that remunerative, but I was single, and it allowed me to live a very comfortable life. I was making $8,250 a year. Nobody would even look at that these days. But in those days, I had a wonderful little apartment not far away from campus, and I loved my life. It was great. I had time to do research. And like I said, I had wonderful colleagues. I was in a brand new building called Bunch Hall, which overlooked the area where the theater and the drama department was located. There were pretty girls always running around on campus, and I thought I'd gone to heaven.
That's amazing. No, I love how you were able to really go from one chapter of your life with, just being, just the events of the life of the world that, you grew up in and really just day and night, right? Come to the US and thrive in such a excellent manner, right? Just being able to really fully immerse yourself in academia and really become a successful member of the US. That's really amazing. And my question to you is, with all that success, right, as well as, the challenging upbringings that you've had, how did all of that shape your outlook of life? The way you were brought up in Germany and then your time in the US while you're studying, how did that shape your view of the world?
Well, Fernando, I think I should also say the US was really the land of opportunity. In Germany, you were living in a much more regimented and orderly system. It was more difficult to do something new. I probably would never have been a professor in Germany. I wanted to actually be a journalist when I was in high school. And, that probably would have happened to me if I had stayed back in Germany. But the US is a very open society. It's a land of opportunity, really is the correct word for it. And so I was very lucky. And I must say, I availed myself of the opportunities that were offered to me, but without having a flexible society that was welcoming to newcomers, I certainly wouldn't have made it.
I think you really summed up what the US offers, right? That opportunity to try to make something out of yourself in this capitalistic society where there is real no limitations in the sense of like if you want to pursue a business or some kind of venture, you can do so, right? Whereas perhaps in other countries, there's probably more regulation, right? Probably lesser opportunities to pursue certain careers or certain business ventures.
Is you do what your dad did. If your dad was a farmer, you're a farmer. If your dad is a baker, you're a baker. And in the United States, these restrictions don't exist. You can do more what you want to do and what you're able to do.
I love that. And again, you're a testimony to that, right? Because you go through all of this, all of these events, and eventually, right? I believe during the mid late '80s, 1986 to 1989, then Reagan nominated you, right, to serve on the Federal Reserve Board of Governors. What was that like?
Well, there were a few steps in between, but they were all in finance. So I've been teaching economics classes. I've been teaching money and banking, international economics, international finance, things of that sort. After UCLA, I spent some time at the International Monetary Fund in Washington, D.C., where I ran what they called the Financial Studies Division. That was interesting because it got me together with a lot of people from around the world, many of whom had fabulous careers afterwards. It was a truly international environment, and it was the capital of the United States. We would go during our breaks, at lunch breaks, we'd walk over to the White House. We'd see whether the moving trucks were already there when President Nixon was in trouble in those days. And it was an exciting time to be in Washington. From there, I was recruited at Bank of America, and I became senior vice president in the economics department, responsible for all the international economic forecasting and doing the analysis of what the bank should be doing around the world. And we were pretty well involved in the decision making. Tom Clausen was the president of Bank of America at that time. He later on became the president of the World Bank. So it was a wonderful opportunity to get to know people and to, very important, I think, to build your network of colleagues, not only around the country, but actually around the entire world. And then, as you said, there came the call from the White House. I remember I was actually on a trip for Bank of America in Tokyo. And in the middle of the night, the phone rang, and sleepily I picked up the phone, and there was a voice there that says, "This is the White House calling." I thought, oh, well, it's probably one of your stupid friends trying to play a joke on you, you know. But the lady on the other side said, "Well, would you be interested in being on the Federal Reserve? If so, let's set up an appointment for you to come to Washington, D.C. for some interviews." And that was the first contact, really, that got me in touch with what became one of the most exciting ventures of my lifetime.
That's amazing. And I'm just curious though, how does that happen? How does that connection from, you're just, you are pursuing your passion, right? You're pursuing economics, you're working from Bank of America. How does that get connected to you get a call from the White House?
Well, like I said, I got to know quite a few people around the country. One of them was Bert Sprinkle. He was President Reagan's chairman of the Council of Economic Advisors. Another one was Bob Mandel, who was a professor of economics, but he was also strongly involved with policymakers in Washington. He eventually got a Nobel Prize in economics. Great man. There were quite a few other people of that caliber. One was Jude Wanniski, who wrote a book, The Way the World Works, and he was a editorial writer for the Wall Street Journal. And a couple of those days, you may remember the two big economic themes that President Reagan has was supply side economics and monetarism. Money was important. In the early 80s, US inflation rate was 12, 13, 14%. Inflation was really getting out of whack. Chairman Volcker was brought in as the head of the Federal Reserve to get that inflation under control again. So, well, it was being connected, and it was having a network of other people that at the right moment advocated for me, that got me the opportunity to be interviewed. So I traveled to Washington, D.C., and I had a couple of interviews in the White House. And then finally, the last interview was with Jim Baker and with Don Regan, who were Secretary of Treasury and the chief of staff of the president, and then a meeting with President Reagan, and I was sworn in by Paul Volcker at the Federal Reserve. And I had my dream job.
It's amazing. Wow. How long did all of that take? Meaning from the moment you get the phone call to then being nominated, confirmed. What was that timeline?
I think I was in Japan and got the phone call in May, and I was actually sworn in August so it took 3, 4 months was the process.
And during that time, was there any self-doubt like, maybe I'm a little bit over my head, or were you always confident, like, you know what, I can do this?
Well, I thought this would be absolutely great, a great opportunity, and I certainly went after it. By the way, I wasn't the only person considered. There were 4 people being considered for the job, and the various interviews were then used to determine which one of the 4 got the job. It was interesting, exciting time.
It's amazing. So once you go through the process, right, and you are now working for the Federal Reserve, what were some of your key responsibilities during your time?
Well, at that time when I was there was a lot of turnover at the Federal Reserve. And for a while, there were only 4 of us. Out of 7 governors, only 4 jobs were actually filled. So we basically had to do it all. I served on every single committee that the Federal Reserve Board members were on. I was the chairman of Bank Supervision and Regulation, which is now a vice chairman job. At that time, it was just a regular job. The other interesting job I had was to be the administrative governor. It may sound a little bit boring, but I found it a very exciting thing. And as I sometimes say jokingly, at that time, with that opportunity as administrative governor, I did the only thing that is everlasting. I designed, with the help of my 2 children, Christopher and Kimberly, the Federal Reserve flag that you see standing behind me, and that is flying over the Federal Reserve building as we speak. So that was absolutely great. I had the responsibility, for instance, as administrative governor. What would happen if World War III would break out and the Federal Reserve had a secret place in the mountains of Virginia near Culpeper where there was enough money stored in the mountainside to replace the entire money supply of the United States. And I was in charge of that. Kind of ironic for a little kid that had been, during World War II, living in a cave. And here I was back in a cave that was going to be the survivor cave during World War III. Thank God it never happened, but it was certainly an exciting part of the job. And getting inflation down, I think, was a very important issue. Like I said, inflation when I got there had just come down from 12, 13. I was there, it was 4, 5, 6%, and we kept getting it down with tight monetary policy under both Chairman Volcker and Greenspan.
So you mentioned quite a few things. So that was real. The mountain with all the money in the world, that's a real thing?
Absolutely. There were
Really?
It was a cow pasture, frankly, was well hidden, and there were cows running on top of that little hill, and then there was an entrance to it. I'll tell you one thing. I was not very impressed by the strength of the doors and the armaments, if you want to say so, for the cave. And I sort of half jokingly said to one of the people who were working there, I said, well, when I was living in Germany in World War II, we were in a cellar that was probably stronger than this cellar is. And they were, I think, a bit upset about that remark and said, well, it isn't really designed to withstand a direct hit, but it's more like a fallout shelter. If there's a atomic war or something like that, that you'll be able to survive the fallout from all the bombs rather than surviving a direct hit. I think that shelter is no longer active. I think it is nowadays a repository for some museums that are storing artifacts in there. So that is no longer there. You don't have to go and try to look for it.
Wow. I am just blown away. And I'm sure there's other things of that nature with other agencies where you just probably think it's a far-fetched conspiracy theory, but some of it must be true, right? There's certain things that may not seem real, but some of that might be real.
Well, the official hiding place for the top government is near the Greenbrier in West Virginia. And so this is a this was a special place for the Federal Reserve.
Amazing. I'm not trying to get into conspiracy theories or anything of that nature, but going back to you, Dr. Hell, and your amazing career, going back to the Federal Reserve, you were at the Federal Reserve during major events like the 1987 stock market crash, right? How did how did that event shape your thinking about financial stability?
Well, that event happened fairly early in my days at the Fed. Chairman Greenspan had just been sworn in. He had just taken over recently, and he was off to, I think, give a speech in Dallas, Texas, when the crash sort of occurred, and allegedly he got off the plane, and the stock market had been falling just a little bit when he got on the plane. He gets off the plane, and he says to the person who was picking him up, he says, "Well, what happened to the market today?" And the driver said to him, "Well, it's down 805." And Greenspan thought it was down 05, so just a little bit down. And he said, "Well, that's not too bad." And the driver says, "No, no, Mr. Chairman, it's down 805 points at that moment." And Greenspan was totally flabbergasted, canceled his speech, got on the next plane. But in the meantime, we were all sitting there in Washington, what to do about it. And Manley Johnson, who was the vice chairman at that time, he took over and called an emergency meeting and said, "Okay, we will provide all the liquidity that the banking system needs in these unusual circumstances." And that was certainly an exciting day that left your mouth dry. The whole stability of the financial system was being threatened, but thanks to the actions taken, we survived it well. It was now just an episode in the history books.
And, I would be amiss if I didn't ask what caused the stock market to crash in 1987? I feel like you being part of the Federal Reserve, you must have a much more clearer understanding of what truly happened.
You got me. I think it was, in a way, like a classical run on the banks, on the banking system. And, that still happens. If you look back, the recent difficulties in 2023, and First Republic and Silicon Valley Bank, when they got into trouble, it was, in a way, again, the rumor mill starts first. A couple of phone calls were made back and forth. And, well, that was a stock market crash. This one was a bit of a banking crash, fortunately contained. But, First Republic, I think it was a well-run bank, and that it went down was really a shame. And it was due to heavy exposure in the commercial lending field. But the bank itself was a well-run bank.
That brings me to a certain saying that I've heard Bloomberg Radio state many times while I'm driving to work, where they say the financial markets isn't the economy, and the economy is not the financial markets. Do you have an opinion on that interpretation or comparison?
Well, but they're closely related. Clearly, if the economy is doing badly, the financial markets will be doing badly. But it can also happen that just something is going haywire in financial markets because institutions are overexposed or something of that sort, so that the initial spark is set off in the financial system itself. But clearly, if the economy goes down, that will be reflected in the stock market, will be reflected in the banking failures and things like that. Now, let me say, when I was at the Fed in 86, there were about 15,000 banks in the country. There was no interstate banking yet. Each bank, quite a few states, like Texas, for instance, had what they call unit banking. There was no bank branching. So nowadays, the system is a lot stronger because you have more diversification, both geographically as well as product-wise. And the first thing you learn in your finance class what provides for financial strength is diversification. And we have a lot more of that right now than we had half a century ago.
If you don't mind me asking, would the opposite also be true, where you have banks that are too big to fail because of this? Um,
Well, you look at all industry, I think you find that there are typically 4 or 5 institutions that are really dominating the industry. First of all, financial industry. If you look at other countries, you look at Canada, Britain, France, Germany, there are always 3, 4, 5 institutions that are truly covering the country that are big financial institutions. If you look at anything else, look at the automobiles. There are 3. There's Ford, there's General Motors, there's Tesla, and those are the giants in that field. Look around anywhere else in high tech. There are always 2 or 3 or 4 companies that are dominating the field. There are a lot of little ones on the sides, and they keep changing and they keep innovating, and they are extremely important for the vitality of the system. Again, if you go back to 1980, roughly 50 years ago, I think from the top 20 banks, there's one still left as the original bank, and I think that's Citibank. The others have changed, merged, and so on. Bank of America, where I used to work, was really taken over by Nations Bank, which was in the 1980s fast growing, but a small little bank, down in Florida and in Georgia and Alabama. They were there, and it was actually called NCNB. Anyhow, you have in almost all industries, you have a core of 3 or 4 banks and 3 or 4 institutions, and then you have all the competitors that come around it. Think back, who were the first giants? IBM was a giant in the computing field and was basically inventing the big computers. Nowadays, IBM is a minor player. NVIDIA, companies like that are the giants. Apple didn't exist half a century ago, and now it's Apple, Google, Microsoft. Even Facebook has become a gigantic company. All of them were started only in the last couple of decades.
that's interesting that you're able to pinpoint patterns, right, in different markets. And I think what you're saying is true in that there is always a very limited amount of players that become the main players. Why do you think that is?
It's competition, the survival of the fittest. And there are always some new companies, some little kids that will eventually be the Olympic champions, but nobody's thinking about them at the present time. And the same is true in industry. And these small dynamic institutions, they grow and they push aside the other ones. And, big industry, I mean, steel works. Who talks about steel? When I was growing up, steel were the giants of industry, and they were almost considered as invincible, the backbone of the United States economy. Well, who worries about steel these days? Few people, right? We need a little bit, but the the really important big companies are in high tech, artificial intelligence, those sectors. And 50 years from now, it will be different.
So you mentioned about AI. Obviously, NVIDIA is all over the news, right? Their performances in the stock market and all that. Who do you foresee being competitors to NVIDIA in the next couple years? Just your personal opinion.
If I only knew. If I only knew, I'd be a very rich man. I'm not a good stock picker. I think I know how to run a central bank. That was lucky enough to have superb leaders like Volcker and Greenspan, and I learned from these giants in the field. But I'm not a good stock picker, and I wish I were.
Well, you know what though, but you're great in many other things, so I think it's well balanced. So clearly, a lot happened, during your time at the Federal Reserve. You left the Federal Reserve I think about late 1980s, 89,
That's correct.
um, right? And you were, I think you had left because of compensation. Um, looking back, do you think the public sector pay, the service pay impacts who's willing to serve in these type of roles?
Well, you brought it up, and you're absolutely right. Actually, let me tell you a little background story. I was just when I got to the Federal Reserve, very soon thereafter, Emmett Rice resigned. He was one of the board members, and we were pretty good friends. And so one day he says, "Well, I'm leaving the Federal Reserve." I just gotten there, so I couldn't imagine leaving the Federal Reserve. And I said, "Why are you doing this?" He says, "Well, let me tell you. I have a son at Yale and I have a daughter at Stanford, and their combined tuition bill is more than my take-home pay." At that time, the Federal Reserve governor was making $82,500 a year. And by the way, I just mentioned Emmett Rice's daughter. You know who she is?
Enlighten me.
Susan Rice. She became the ambassador to the United Nations under Obama when Obama was president. Anyhow, so he left, and when a couple of years later, again, I was talking to a friend of mine, and he said he was with Bank of America still at that time, and he said, "I'm at Visa. I'm on the board of Visa," and he said they're looking for a new senior vice president for international. Would you be interested? And well, the salary would be double, and I would be able to go back to San Francisco, where Visa is headquartered. And I thought this was an opportunity that would just not come again. See, there's also a rule for Federal Reserve governors. If you leave the board, you cannot work for a bank or any institution supervised by the Federal Reserve for 2 years. And so it becomes very limited what you could be doing. So Visa was perfect at the right industry, financial services. I knew about Visa, obviously, because Visa was actually, it grew out of Bank of America, which was the founding company with the Bank of America. And it was in San Francisco, California, where I really I loved it as a student beforehand, and also my time with Bank of America. So it was very difficult to say no. And I accepted the job. And then eventually I was the president of Visa USA. At that time, there were two companies. It was Visa International, Visa USA. And again, it was a great opportunity.
What was it like shifting from central banking to Visa?
Well, obviously, I had a lot to learn new about the payment system. Although the payment system, the Federal Reserve runs its own payment system, FedWire and FedNow and so on, and all the bringing the currency in circulation. The Federal Reserve has a central role also as a clearing institution for all the banks that are member banks of the Federal Reserve System. So the payment system was not something alien to me. It was not a big change. So I felt very comfortable there. At that time, Visa was a young startup company. We had 350 employees, if you believe that. Now there are some 30,000 employees. The founder of Visa, Dee Hock, he had just recently left the company, and it was a time where they were really enhancing the staff, growing the staff, and I was lucky to be part of that expansion.
What's amazing is that, you go from, and again, just going back to your origins, right? You go from surviving a war to coming to the US and having an amazing just academia career, transitioning to the Federal Reserve, going to Visa, and then from Visa to FICO. That's so unheard of. Explain how did they go from Visa to FICO?
Well, at Visa, there was a lot of turmoil in those days. Dee Hock, the founder of Visa, wrote a book about the early days of Visa, and the book is called The Chaotic Organization. Chaotic is a word that he coined. chaos and order at the same time. And he wanted an organization that was very dynamic, in a way, chaos-like. People were arguing with each other all day long. At the same time, he wanted to have order. It was not an easy time to be at Visa, to be perfectly frank. It's now a much different organization, a more mature organization, a bigger organization, and a good friend of mine is running it right now. It has been eminently successful. So the time came when, it's time for me to move on. And Bill Fair, who was one of the two founders of Fair Isaac, the word FICO comes from that, he asked me whether I wanted to be on the board of the company of Fair Isaac. And I joined the Fair Isaac as a board member. A little bit later, I also then started working as an executive vice president for most of the administration's areas in Fair Isaac. And Fair Isaac was a wonderful company. In a way, you can think of Fair Isaac as one of an early artificial intelligence company. Because what's their goal? They try to predict whether a mortgage, a car loan, or any old bank loan, whether that will fail. And it was an early artificial intelligence company. I would call it that way. And therefore, again, a wonderful place to work, great colleagues, and I enjoyed my time there.
I would say there's truth in what you said about it being an early AI fintech type of company, right? Where you do try to predict, consumers' habits and rate them. Are they going to be a good candidate for a loan, not for a loan? You know, and that's interesting because this was something new, right? So during your time there, what was the most challenging thing with bringing up this crediting system abroad? Like what was challenging about this? Was it convincing individuals that hey, this will work, or was it so foreign that it was hard to explain, the US style scoring system?
Well, Fair Isaac is a unique institution. There are three big credit bureaus. And here we are again with three big institutions: TransUnion, Equifax, and TransUnion, Equifax, and well, it's one more. And these three credit bureaus, they assemble all the data, on the quality of bank loans and whether they are in default or not. And Fair Isaac grabs the data, and Bill Fair used to call it the three-sided pasture, So it was a pasture with the three credit bureaus on the corners, and here was Fair Isaac, which took all the data from these three credit bureaus, brought them together, and made sense out of them, and sold the data to the banks as predictors. And that was the genius, Bill Fair and Earl Isaac. Wonderful people who really were innovative and were there, again, basically inventing artificial intelligence.
Amazing. Well, Dr. Heller, before we go, if there's one lesson you learned about balancing career ambition with family life, what is it that you'd like to pass it on with younger professionals?
Keep at it. Even if you fail, if you have some early problems, some issues, I flunked out of high school. Keep at it, and eventually you'll succeed. If you don't succeed at first, try and try again.
Dr. Robert Heller, thank you so much for being on. Appreciate you, sir.
Thank you.